Can you increase your chances to compete with other buyers in our very demanding real estate market? Can you know how your buying power is determined by a lender? That's what this week's real estate message is about. I'm John Cowan with Ultra Realty of Texas. And folks, this is very critical because pretty well all over the country, we are suffering from a lack of real estate inventory. You're hearing all these things about sellers controlling the gold and they're in a great position, and buyers are having to compete against other buyers for the limited number of properties that we have. That can make things very challenging. As a realtor, my responsibility is to do everything I can to increase your chances. And there are things that I can do contractually, terms, things of that nature, and some of the negotiation methods that I like to use. But it really starts with the financial strength that you have. So that's what I want to dwell on today. There's really no way to start without starting with your credit score. And so just real briefly, we basically have three reporting credit bureaus: Experian, Equifax, and TransUnion. Folks, it's still a mystery to a lot of people how the credit score is determined. Suffice to say, the three credit bureaus all do something a little differently. They all will come up with a different score. And so the mortgage lender is going to look at the middle score, not an average of the three, but your middle score. So it's very critical to have all three of them, of course, in the best position that you can. The credit score goal should be 720. You're going to hear things like 800, 850 is a high point, 720, and you're going to get the best mortgage rate typically that's available in the market if your score is that high for your mortgage FICO score. Critical that it's your mortgage FICO score and not one of the many other types of credit scores that are given to you for your credit history as well. So can you buy a house with less than 720? Of course. Can you buy a house at less than 650? 650 is really kind of a bottom point, and we get below that, and you're going to have additional cost to achieve your mortgage financing. You're going to have a higher rate quoted to you, and so the lower your score, it doesn't mean that you can't buy, but it's going to cost you more. So that would be a goal, is to shoot for 720. I want to mention this real quickly while I'm on that subject. There are things that you can do to tweak and increase your score. Do not attempt to do that on your own without talking and having direction from a mortgage professional. There are things that you could do that would ruin your chances of getting a mortgage loan for a minimum of a year if you do it wrong, okay? Your debt to income ratio should be less than 43%. John, what are you talking about? Okay, think of long-term debt. Credit cards that you're making minimum payments on, your automobile note, your mortgage payment would be included in that figure. Student debt, any student loans that you're paying on. You add those long-term debts up, and that percentage compared to your gross income is what a lender calls your debt to income ratio. Can you get a mortgage if your debt to income ratio is higher, 45%, 46, 47? Yes, but again, it's going to cost you and make it much more difficult for you to get the loan that you really want. And so again, that is your goal, is to have your long-term debt below 43%. Your down payment can be flexible. Of course, you're going to see 20% down and all the advantages, and there's several, okay? But we've got programs out there where you can qualify for a mortgage, and some of you may qualify for more than one zero down type mortgage. If you're a veteran, USDA has a special mortgage for rural areas, and rural areas defined in each city a little differently, but you can get 0% there. There are down payment assistance programs where they will contribute an outside source contributes the down payment for you, and you pay for that in your interest rate. So a lot of different options, but again, the best thing is to have your down payment as large as possible. You want also to have some cash reserves. A lender is going to want to see that you've got maybe a few months of cash reserves available. So if something happened right after you moved, that you would have the ability to still make that payment for the first couple of months or so. So again, these are all best case scenarios. And is this everyone? No, it's not. And can you buy a house without meeting all these qualifications? To these points, you can. It's just a little harder to do. So if we are in a multiple offer situation, you want to flex your financial muscles. So you want to be able to show that you've got a bigger down payment than others. You want to show, it'll just show commitment on your part, okay? If we are in a bid situation and you want to go a little over the asking price on the home, you need to show the financial ability to do that, because your lender may not be willing to loan more than what the list price is. That's determined by the appraisal value of the property. Example, a house is on the market for $300,000. You say, John, this is it. This is the house for us. If we go to 305, do you think we'll get it? If we go to 305, will it appraise for 305? Let's say the appraisal comes in at 300. That $5,000 differential that you offered has to come out of your pocket, because the lender says the appraiser doesn't see that it's of value for 305. But if you choose to pay that, that's fine. But you got to come out of pocket. So here's where it helps to have that financial muscle of having some cash, to be in that kind of position, because you can take the lead point on that offer and, possibly gain the house that you really want by beating others out with that tactic. So when you need to show these cash reserves, it'll need to be shown by your bank statements. And that money is very critical for it to be shown in your bank account prior to you making, a mortgage application. So buying below your maximum lender allowable. What do I mean by that? A lender may say you're qualified, to buy a home for $300,000. And you may say, gosh, I don't know that I really want to pay that much per month for what that payment's going to be. If I bought at $275, I'd be happy. Well, if you're going to buy at $275 and you have financial capabilities to go higher, that can also increase your possibilities over other buyers, because other buyers may be going to their max at $275. You actually could go higher. So again, you could offer a little more. A lot of different little tweaks and tactics that we can look at to increase your opportunities in that kind of situation. So, I think the basic point here is that it's important for you to have all of these things in order before we go out and take a look at properties. It's best that you not get your hopes up looking at certain things unless you've got all the capabilities in place to pull the trigger. We just don't have the time or the luxury of going head to head with other buyers on some of these properties. So if you have questions, reach out and contact me. This is not something that is set in stone, that every person falls into the same category. Everyone has a different opportunity, and maybe it costs one a little bit more than the other, but that's not a problem if it meets your goal of owning a home, not paying someone else's mortgage, not paying rent that's flushed down the commode, and you actually have your opportunity to buy and own a home for you and your family. So again, pick up the phone, call me, go to my social media, any way you want to get a hold of me. John Cowan with Ultra Realty of Texas. I'm located in Richardson. I can help you anywhere in the state of Texas, but you've got to give me a call. Thank you.